I just hit it on the cloud. I'll make you the host. I think you should be one.
Great. So thanks everyone for joining. I'll just do a quick overview before we turn it over to Terry, Philip, and Julian. So we have a surprise extra guest in our own DeFi Guild lead, Julian. Today we're going to talk about DeFi innovation. So what that includes is multiple parts of the ecosystem we would typically not cover in our usual sessions around, for example, some of the topics that Dan brought up around DeFi primitives. We're going to talk a little bit about what builds on some of the topics that we've talked about already. So Terry is an expert on NFT finance, even game economies. Philip is an expert on DEXs and aggregation plays, even cross-chain. Julian is an expert on all things DeFi. So I'm going to give them an opportunity to introduce themselves one by one. I'm also just going to share a couple housekeeping items before we get started. I think, once again, this is our last DeFi Guild panel. We do have some of the build tracks, so if you're interested in that, once again, there's the podcast where you can kind of get involved. In the podcast channel, there's the build track with the Wikipedia, which Danny's leading. Danny, I don't know if you want to say anything about that. And then there's the build track focused on building the actual development piece with Gabriel and Julian. So Gabriel, Julian, Danny, I don't know if you want to share anything. Okay.
Sure. Just really quick on that. On the build guild side of things, we went into it with the intention of, minimally getting something done. And it looks like we're going to get that minimal something, and that's about it, which is great, right? So, thanks guys for participating so far, right? There hasn't been a lot of active participation, more like passive, involvement. But it's been good. And tomorrow we'll be trying to get into like a little bit more of how people actually connect front ends, etc., like basic ethers, JavaScript stuff to actually enable you to create a dApp, right? So yeah, that's the plan for tomorrow. Cool.
Okay. Can you all see my screen?
No.
I see your screen, but it like just blacks out.
It doesn't like full screen, I guess.
Yeah.
Okay, let me try something else here.
Same thing. In a worst case, I think you could just, have it not be full screen. Not
Yeah,
we can just
I think
whatever.
I'll just share my screen briefly, and then we can go into some of the questions. So once again, we have Terry, Philip, and Julian with us. We do have a Slido link as well. So if you want to take a picture of the screen, pull out your camera and get the QR code. I think Danny or Greg, or if you don't mind just pasting the link in the Zoom, I think that would be helpful too.
Yeah,
before we get started, I wanted to give each participant an opportunity to briefly introduce themselves. So why don't we start off with Terry, if you could just give like a 1-minute intro and then pass it on to Philip and Julian.
Yeah, for sure. Thanks for the invite, guys. My name is Terry. I'm currently an investor at 1KX, but I'm also part of the engineering team at Goldman Sachs, which is a 1KX incubated sort of external DAO focusing on developing out the NFT finance ecosystem. I'm also a budding content creator where we have a weekly podcast talking to people in the NFT finance space. And I've been writing about NFT finance and NFT infrastructure for, I guess, about like a year and 2 months, a year and 3 months. So yeah, that's my background.
Awesome. Why don't we pass it to Philip?
Yeah, hi, I'm Philip. I'm the founder and CEO of DeFi. DeFi is building a multi-chain DeFi middleware. So whatever kind of transaction you want to conduct on any chain, you would you would need a basic amount of DeFi infrastructure like RPCs and gas estimation APIs, DEXs, DEX aggregators, often also bridges if it's supposed to go cross-chain. And we provide all of that out of the box, smart routing algorithm and a smart contract on each chain. We are on 19 EVM chains. So it allows you to build applications cross-chain, or if you're a wallet, you can do cross-chain swaps. If you have liquidity pools, you can use us to rebalance your liquidity pools without having to think about how. And yeah, we're around 40 people. We were a kernel member last year, and it was quite helpful. Met plenty of successful founders and our first angels and investors at kernel. So absolutely grateful, and thanks for having me.
Great to have a Kernel Fellow back for a panel. And another Kernel Fellow and one of our DeFi guild leads, Julian. Do you want to just do a quick re-intro?
Sure. Yeah, you guys know me. But to give you guys more of an intro, and there's a new project I'm working on that's worth describing. So I'm the CEO and founder of a project named Swivel, where we do yield tokenization. We take a yield-bearing deposit, generally speaking, stuff like Lido or money markets like Compound. And we allow users to tokenize their deposits until a future date, essentially splitting them up into a yield component and the actual deposit itself. You can then create a bunch of things with that, primarily fixed rate lending. So that's what I've been working on for the past couple of years. And as something to actually kind of amplify this space, and this is a common playbook actually, is building an aggregator on top of your products. We're actually also building the first fixed rate aggregator, which the intention is really to serve similarly as middleware. Right now, it's very much, it's impossible to build on top of fixed rates. And the goal is to internally build things like bond-backed options and to build, infrastructure that really can't be replicated traditionally. So yeah, that's like the newer intro, I suppose.
Awesome. So excited to have everyone here. I'm going to switch off my screen sharing so that we can focus on the speakers. And I wanted to kick things off by asking each of you, what DeFi innovations or tangential pieces to DeFi are you all most excited by? It's okay if you show your own company and what you're focused on as well. I think that's understandable, but love to start off with that general question, and then I'm going to go into some more specifics.
I can start, I suppose. I'll start with my company and then say something else, right? Well, or rather not what we're doing now, but what our goal really is, right? I think that there is an inherent advantage for products like fixed rates within DeFi over traditional finance, simply because you can build a lot of fungible products, and rather composable is a better word, that allow you to rehypothecate significantly, right? Specifically, like I was talking about, bond-backed options, right? If you were to go to a bank with your treasury bills and try to get them to allow you to underwrite some Tesla puts with it, they'd say there's no, they'd laugh at you for a number of reasons, honestly. But this is sort of stuff that is native to DeFi, and really there's stuff even on top of that, like building it on top of ETH and routing all this liquidity through ETH 2.0, right? There's just DeFi native stuff that I think is coming. Other stuff, I'll give one of the easy answers. I'm a big fan of pseudo-swap, right? There's limited applied use cases in many ways to the sort of individual liquidity pools that pseudo-swap offers. But in many ways as well, it's just a more optimized version of a simple, OTC exchange. So, I mean, I'm a big fan of that, and I'll leave it at that.
Yeah, I can go.
I think that's a natural transition. Terry, would love to hear what you're thinking.
Yeah, on DeFi, obviously excited about LiFi, but besides that, I'm not too familiar with the DeFi ecosystem, or at least sort of the cutting edge evolution of the DeFi ecosystem. I'd rather say I've been mostly active around NFT financialization. And I think you should be excited about NFT financialization if you're excited about NFTs, if you think NFTs will continue to accrue in value, and if you think the set of things that become NFTs increases. it's kind of a natural transition to say, okay, these things are becoming more expensive. More things are becoming NFTs, and more, I guess, real life things are becoming NFTs. Then what can you do with them? And the natural progression then becomes, all right, like what is the infrastructure rails? What are the sort of things you can do, like your tokens, DeFi-esque, that's are either financial or non-financial with NFTs. And that's sort of like why I first came into the like NFT infrastructure / NFT finance space. Yeah, specific protocols, you know, like Nifty-Fi obviously currently has the most traction. SudoSwap is up there, but there's a lot that are launching probably in the next quarter. A lot coming live.
Yeah, then I'll finish. I'm also not too much into the DeFi space. I'm more in the interoperability space and infrastructure space. But all in all, what we see more and more is aggregation abstraction. And we believe that this is something that will pave the way for the next huge wave of adoption. And we see aggregation abstraction not only in the interoperability space, like what DeFi is doing, but we also see this on the DeFi space. More and more aggregators of all kinds, like lending protocol aggregators like FujiDAO. This is happening, right? And we know plenty of other projects. At the same time, I'm super excited about these DeFi protocols going cross-chain, and with Layer 0 and Axelar going to market, we see plenty of projects building on top of them. Also, plenty of them are building on top of us, or a combination of both. So this is really interesting. And at the same time, we see so much innovation around this space. Like this is it's a very fast-paced, a very fast-changing space. But there's a lot going on with zero knowledge proofs, storage proofs, like how can we prove state across chains without having to interact. This is super exciting. So it's really hard to stay on the top of things. I think, yeah, that excites me the most. No particular DeFi protocol that excites me like crazy. It's all just interesting to see. Yeah, I think what Julian is doing with Swivel and the new protocol he just described has a lot of potential. Definitely following that one.
I'm interested. So you mentioned people designing around you guys and or stuff like Layer 0 / Axelar, right? Like this is a tough design space. I'd say it's probably like the toughest to really think through right now in terms of how you build your applications. What sort of stuff are you seeing like built on Axelar versus through you guys, I suppose, right? Like what do you think you guys serve more than them?
We are not really competing. Look, we are aggregating. So if we take a look at the bridging space, we have two different kinds. We have arbitrary data messaging bridges. These bridges are very generalizable. They can share state, they can send information, they provide programming paradigms like asynchronity and callbacks and all of that. So you can really build complex cross-chain native applications. What we aggregate are liquidity networks. So these AMBs, they have a problem so right now, Layer 0 is fairly centralized, so it's cheap and fast. But once they start decentralizing, validating becomes expensive. So, and because validating becomes expensive, it's not really desirable to mint and burn all the time. So you rather take the minted tokens and you have a liquidity layer on top. So Layer 0 has Stargates, Axelar has Satellite, and is currently seed funding a second one called Squid. And then we have so Nomad is partnering up with Connect. Wormhole's liquidity network is called Portal. So we are, like as DeFi, we are aggregating liquidity. We are aggregating these liquidity networks. So it depends on what you need. If you want to send messages, and if you need that, you go with an Axelar Layer 0. Right? If you just need access to liquidity and that cross-chain, or with DeFi, like we are not only aggregating bridges, we also connect them to other DEX aggregators on each chain. So also, if you don't need a bridge at all, you could use us to just get access to all the DEXs and DEX aggregators on each chain. So if you need liquidity, you would use DeFi. If you go for messaging, you go to an AMB. The way we design our system is that you can actually plug in any AMB underneath. So that's not released yet, but soon. So you can then actually work with one API, you get everything out of the box, and then you can plug in Nomad, Axla, Layer 0, whatever you feel like it's best.
So you guys are actually
below
going to be
that.
trying to essentially aggregate the messaging, although it's not like really aggregation, like, yeah.
Exactly. It's not really aggregation. It's more like providing a unified
Access.
interface to all
Yeah.
of them.
Yeah.
Exactly. Yeah.
Cool. Cool.
Very,
Sorry, that was
very
just like a
exciting.
little introduction.
Before we go deeper, I wanted to see if each of you could LI5 each of your specific areas of expertise. So maybe Philip, you could talk about aggregation. Julian, if you could talk about interest rate, fixed interest rate products. And then Terry, if you could talk about NFT finance, just to kind of level set the audience overall.
Okay. Yeah, of course. So one trend we have seen over the last year is that more and more blockchains that are smart contract enabled became relevant, right? So 1.5 years ago, it was running Ethereum, and then we had to learn that Ethereum has to scale. So Optimism Arbitrum came, and there was a natural desire to solve this problem faster than Ethereum would do it. So we saw Avalanche, Phantom, Polygon doing incredibly good job at business development. So what happened is that now we had suddenly not only fragmented infrastructure to build on, right? It's not one single chain anymore, it's multiple chains. So we have fragmented infrastructure, and especially once these have different smart contract languages, and you need different kinds of support systems around that. And at the same time, of course, I mean, we can't copy money. So liquidity is fragmenting as well. Now, if you want to bridge, then a typical mechanism, how these liquidity networks work is you need, I mean, these blockchains have different consensus algorithms, right? So in order to move funds from one chain to the other, that's physically not really doable. So the way it works is there is a man in the middle. That man in the middle has liquidity pools on both sides. This is fragmented liquidity. So you would simply send funds to that middleman, the bridge, locks funds here, releases them on the destination chain for you. This is what's happening with bridges. Now, this is obviously quite lucrative. Projects like AnySwap, back then now called multi-chain, have done a lot of volume and made a lot of money with it. Yeah, it exploded. The space exploded. There are like 70, 80 different bridging projects out there. So we thought like, well, how can a user make a choice which bridge to use? And it's not only because of available liquidity that's different on these bridges, also they take different trade-offs. Some are faster, some are cheaper, some are safer. On top of that, it's just ultimately complex, and they also support different source and destinations, right? So by using, for example, our B2C interface, transfer2.xyz, where you can go and you get access to all these bridges out of the box, and we have the smart routing. You don't have to make that decision anymore. You simply say, I have cake on BSC, I want to have magic on Arbitrum, show me the possibilities. And then you see the possibilities, you see how long does it take and how much does it cost, what do I get out of it? And you can execute all of that within one transaction, by the way, because these bridges are limited to, because they need these liquidity pools, they have a capital efficiency problem. So they are very limited in terms of which tokens they allow to bridge. So they have huge funds of USDC and USDT and Matic and ETH, right? But there it stops. That means if you come out of a long tail asset, you need to swap beforehand. If you want to go into a long tail asset, you might need another swap on the destination chain. By using us, you get all of that out of the box. We talk to all the DEXs, all the bridges, and all the DEXs again, and then calculate multiple routes, and you can go there within one transaction. It's even more gas efficient than having to do all of these steps manually. That's what aggregation does on that level.
I'm sold. Where do I sign up? Julian, I don't know if you mind doing
Sure.
that.
And honestly, I like it's important to start with like the motivation, I think, which is like a lot of what Philip was going through. Right. So I started my project, and initially it was just a hackathon. There was an extreme amount of volatility, but the rates in DeFi were high. It was really ranging between about 5 to 15% at the time. And people were searching for a way to reduce this volatility, right? This problem space has become less important over time, just as rates are lower at this point. However, it really led to the rise of a few products, namely our design, right? So I started with our design, and a number of others co-opted it. And then we've kind of essentially differentiated ourselves by creating a product that, yes, we take the yield bearing deposit, split into two components. One is the yield component and one is the principal itself, the actual deposit. And then people can trade the yield component. This effectively creates what is really an interest rate derivative, although we don't want to say this for legal reasons, that is extremely useful for the hedging of future costs, for the creation of a number of instruments, and etc. And for the most part, nobody actually, other than us, and this is our differentiator, treats them as a derivative. The yield token's price, if it's based on the amount of yield you'll generate over some period, should vary significantly as the underlying rate changes. However, for all of our competitors, really, they end up just sitting and quoting the exact same thing regardless of what the underlying rate is. So this is really where we're differentiated, and the bigger swivel vision is to be the sole protocol that people can really trade rates on. And it seems to be, at least at the moment, that is the case. That said, there's a wider problem space that we discovered in the creation of Swivel, which was that for integrators, there was extremely difficult just onboarding process for us directly, in addition to the onboarding process to integrate our competitors and the number of competitors. And then there's fragmented liquidity across all these protocols. And all of this essentially meant that there was no rate trading in DeFi. There was no integration of fixed rates in DeFi. And the ones that, like the small integrations that were there, were too illiquid for people to really use. So that's where we came up with the idea. Similarly, right? Like these are a lot of the similar problem spaces that Philip was just describing. You need to create an aggregation service that is able to provide users the access to the best of all these protocols, as well as deeper liquidity than any individually, right? And that's how we came with our idea now. And I'll share the testnet link with you guys. It's private, so don't share it around. But we'll be releasing this product in the next couple of months in order to aggregate all these markets and provide one single interface into fixed trades, right? With that, again, there's just like so much more you can do. And obviously I'm pumped for that reason. In general, again, if you guys want to reference anything on fixed rates or just like more rate volatility and rate trading, feel free to reach out. But I'll leave it at that.
Julian always dropping that sneaky alpha in there. So I appreciate that. One clarification for the audience. So when you talk about a yield token, say I take part in a pool on Curve, for example, and it's like a two-sided stablecoin pool, USDC and I don't know, Origin USD or something like that. And I get a CRV token. Is that the yield token that you're talking about here?
It could be. We try to stay away from tokens that could have like negative yield depending on your point of view, right? So in that case, because you have two assets, you're always losing money or always gaining money, depending on the way you look at it. And so we tend to go with assets where one single thing will earn interest. However, you can also do LP positions. It's just less of a applicable market, if that makes sense, right? The
single-sided staking.
Yeah, the largest market is ETH. All right, like there's an extremely large use case to betting on future gas prices, hedging gas costs, and in general, just like avoiding stuff like dilution and slashing risk when you stake your ETH. And we can provide all those services as well. So that's something that we're getting into.
Got it. So Terry, going back to you, in terms of NFT finance, heard a lot about SudoSwap, NiftyFi. Been a lot of talk about it over the last couple of months. Like, how would you explain, like, why is this interesting, and what's kind of going on behind the scenes to make this happen compared to, let's say, using something like a centralized exchange like OpenSea or something like that?
Yeah, for now, it's much simpler than DeFi. The reason why it started to happen is because NFTs started becoming valuable. Once they became valuable, people wanted to access its liquidity without having to sell them. We actually have observed this weird data point where I think something like 50% of people pay back their loan despite it being negative equity because they don't want to get liquidated on their NFT because they love their NFT. It's an entirely different market. We, as Goblin Sachs, started operating in the market, not necessarily because we saw this like immense need for a product that didn't exist, but rather that because there was already a market on NiftyFi. and the rates were so attractive, and yet we felt like the players were not entirely yet efficient. And we thought, hey, we can come in here. We have the mathematical, financial, engineering prowess to do this. And so that's how Goldman Sachs as a lending collective started at the very least. Why is this important? Is because there's a lot of people who have a lot of value locked in NFTs and want to unlock that value, and B, want to buy some sort of NFT derivative. So yeah, TLDR, people want it, and so we're happy to provide it.
Awesome. I want to turn, I think that makes a lot of sense. Just one clarification question for me in case it helps the audience as well. So let's say, I don't know, I bought a Bored Ape Yacht Club NFT at the height of the boom when it was like, I don't know, 120 ETH floor or something like that. I think at one point it was like 150 ETH floor. Put it up on NiftyFi or one of these platforms as kind of collateral and took a loan against that. And now all of a sudden the floor collapsed and it's basically half its worth. What happens then? You're basically, it's almost like a negative equity asset at that point in terms of its original value of the loan. But how do people deal with that situation?
Right. So essentially you bought a put option, right? And then now your put option's in the money. And so you default on the loan and boom, right? Like say you had 150 ETH floor ape, you got 100 ETH in loans, like collateralized ratio there. And then the Bored Ape goes to 65 ETH. And then boom, now if you default, right, you're in excess of 35 ETH. So essentially you made money by purchasing a put option or like a non-recourse collateralized loan. The weird thing though in the NFT markets is that, like if it's especially a Bored Ape, there's a high likelihood that the person who borrowed it actually wouldn't default despite it being within their best interests. People like identify with their NFTs. People, have to maintain, like if you, people like snoop your wallets and they realize your Twitter PFP is not in your wallet and they're like, excuse me, sir, like I know this bad thing happened to you, but you shouldn't have this on your PFP. So people are kind of like wary of that kind of stuff. So, if you take in account like those factors, then yeah, like it's pretty attractive once again as like a collateralized loan issuer or options writer.
How much are you actually making, right? So you phrase that right as well. It's essentially underwriting an option where it sounds like maybe the person actually wouldn't call it, which is kind of cool. So like, how is it actually priced? How much are people making at this point, I suppose?
When we first started, the average APRs were about 100% for a 30-day loan. So
okay, it's pretty good, I suppose. Yeah.
Yeah, it went up to like, especially there was this weird factor where, as the duration decreases, actually your APR should reflect that. But most of the APRs were being decided flatly. So for every LTV, people would give out all the same APRs. And then for all the same durations, as long as it was the same like asset, people will give out same APRs as well. So at the very beginning, we saw this weird phenomenon where like 7-day loans we're having like 300, 400% APR. So yeah,
I'll take it. Was it like gas costs maybe? Like I don't know.
No.
Or I guess, do you know who these people are? Have you guys talked with the liquidity providers?
We are the liquidity providers.
Okay. So you need better models is what you're saying. I don't know.
Yeah, we were the one who came in. I mean, we saw this market and we thought, wow.
Yeah.
So if you think about it, actually, the reason is because when you are the UI of NiftyFi, I believe back then, you decide a principal and you decide the repayment amount. So it's very easy for you to say, okay, here's 7 ETH. I want you to repay me 7.5 ETH in 7 days. Doesn't seem that crazy until you run the numbers and then you realize, well, that is like absolutely ripping someone off. But a lot of the NFT borrowers back then were very agnostic because we realized that a lot of them were they were recursively flipping mints. So they would get a mint, collateralize it on NiftyFi, get another mint, and then you know, like just flip mints like that. And back then, you know, the market was crazy enough that something like that could happen. Of course, now it's been 8 months almost. So like a lot of the yields have compressed.
Yeah,
But yeah, I mean, don't come flooding in just because you heard it here.
cool.
Not investment advice, right? Only during bull markets. um, I wanted to take the top question from the Q&A. So if whoever asked this question, what are some things around NFT infrastructure and our cross-chain NFTs that are still missing? I don't know if that's one of the audience members here. Feel free to add any additional details here. Maybe that's a question for Terry.
NFT infrastructure, one thing that's missing is a good index. And again, like that is an extremely difficult problem. NFT derivatives have not been able to take off at all because of high collateralization ratios. So if that is something that could be built, then we could see a lot more, like, of course, there's also just the illiquidity and volume problems as well. But if there was some sort of widely agreed upon decentralized index, I think we could see a lot more people being interested in buying like calls and put options on NFTs. Cross-chain NFTs, not entirely sure in that regard, because I've only really seen like a couple projects doing this. I think you could have like interesting primitives with games and like cross chains. It's sort of like just like a battle between chains for like control over NFT. It's just like out of their idea. I think that would be pretty interesting. But we haven't seen much in terms of like NFT finance and cross chain applications. But I think Philip has something he wants to say.
Yeah, there are some projects around this. I'm particularly concerned, you know, like we made that promise to artists, hey, put your art cross-chain and you can avoid secondary markets, you can profit from future sales of your products. Once we start bridging NFTs and there's no standard, and there is no standard right now that employs like the royalty system, we could be respected by bridges, right? As long as that's not given, we are starting to create secondary markets again for those who we promised to not have them, right? So that's kind of sad. And I think it's actually a great value proposition for the creative industry to be active in this in the Web3 space, because it's like that. You put out a piece of art and it gains value over time. So the royalty mechanism is a very sustainable mechanism for artists. And we should make sure that we put effort into standardization of royalties, and then they have to be respected by infrastructure providers. There are some cross-chain native NFTs that are being minted, like ghosts on layer 0. So we see a few of them, and I think it has a certain interesting twist to it. Could make a lot of sense in terms of credentials. It could make sense in terms of gamification, but I think especially the identity space can profit from that. But it is very early when it comes to NFT bridges. So yeah, I would wait, and like the current status, I don't really like.
Yeah, I would echo that. It's relatively early right now. I think a couple companies' protocols to keep a look on. I think our Recur is focused on interoperability of assets, and specifically NFT assets. And I think there's some interesting developments on some of the newer L1s like swathe, which is they've basically created a way to like port your ETH assets onto their chain as well, specifically for gaming use cases. I wanted to take a break from the Q&A to see if there's any live audience questions here. Just anybody who wants to unmute and ask a question.
I have so many questions. I don't know which one to pick. The first, I've been meaning to ask Julian this for a while, which is in terms of the idea of de-risking staking for proof of stake systems in general and Ethereum too specifically. To what extent do you, how does this all work together with the notion of like public goods? Right? So like some of the more idealistic folks of who I am some occasionally.
You don't like Lido is like the central point. Like Lido is a big like red flag essentially.
Sure.
Yeah.
In some sense, I'm interested in like, you know, like when we like de-risk, that's good, but it also financializes the.
Ideally, so are you familiar much with Rocket Pool? Would be my first question.
Yes, I love Rocket Pool. I'm a
Okay.
huge fan. Yeah.
So like, yeah, like I'd say I'm very biased, and I'm a bigger fan of Rocket Pool than Lido, right? The big issue with Rocket Pool is just they haven't figured out their liquidity yet, right? So like what needs to be done is there needs to be massive investments or like to pump the Rocket Pool ecosystem fund in order to ensure that there's continued decentralization, right? Like Lido is great and extremely needed. I don't think it's a bad thing to continue to financialize and push stake through Lido because they've done a decent job of decentralizing on the back end, but that's not something you want to necessarily enshrine, right? So like having whether it's Rocket Pool or any other way to, I'll actually give credit. So someone going into this market for specific validators is a project called Alchemy. The issue when you try to do things in a way that doesn't go through a third party like Rocket Pool or Lido is that you start to create these completely non-fungible markets where like, okay, there's an agreement between one validator and one counterparty, right? And like all of a sudden that validator can exit if they can find someone to buy that specific agreement from them, but there isn't an actual market with liquidity available. So yeah, the only real solution at this point is actually to build everything on top of Rocket Pool and hope that they continue to push towards their goals, right? And honestly, I think at this point they've been successful. So yeah, that's probably my biggest answer.
Sure. No, I appreciate that. And it points to like a wider issue, which will maybe just take me into a different question for Terry and Philip, which is like, it's fascinating to watch how simply having like a public, verifiable and adversarial ledger doesn't necessarily solve all of our incentive problems. Like this ETH2 one is an interesting one, but the same applies to royalties and the ability to actually build decentralized indices and to have interoperable NFTs in this case, because if you have different royalties on different kinds of NFTs, then they're even less fungible than they originally were. And it's very difficult to imagine what, kinds of fragmentation result from that. And in particular, the reason that OpenSea doesn't respect 2981 is because they have no incentive to do so, right? They charge a 2.5% fee on every sale that goes through their marketplace. And if they respected the open standard, then they wouldn't have a business. And so that's kind of my question to you, Terry, is like that decentralized index, like who builds it and what are the incentives for doing so? And is that not an even bigger problem than the actual raw technical challenge of building such a thing? It's like
I think
who does it and why?
Indexes are going to be huge, right? Like Terry was mentioning that, like, I don't know. I think I can say this because I don't think it's like super proprietary, and we talked about it in previous podcasts. Index Coop is coming out with like a stable coin, a diversified stablecoin lending index. And in that, they're also including fixed rate lending. And I'd actually kind of include the similar topics across this and NFT indexes in that this is going to essentially mean that Index Coop will be the first large rate trader in DeFi, right? They're going to be taking on large positions. And should there be any differences between, let's say, Swivel's rate and the competitor, well, they are actively arbitraging. And like I know that you need liquidity to create an index, but the result really is that the index itself creates liquidity, right? So it's kind of like a bit of a chicken and egg thing. And like, at least in rates, it sounds like likewise in NFTs, it'll be extremely important to establish. Sorry, I guess there was an initial conversation, I suppose, but.
No, I can add on to that.
Sure.
The incentive is to settle derivatives on top. Of course, the incentive to have a derivative market itself is weird, because imagine you have 10,000 NFTs that are spot trading. Say 3,000 are locked in collateralized lending, only 30% penetration, 20% even. And then, like and imagine like a derivative market for like the rest of the 2,000. and the notional volume on that easily exceeds the spot liquidity.
Yeah,
Right. The incentive there is just attack.
it gets weird really quick. Yeah.
Yeah, it's like easily, okay, attack the index. Then naturally speaking, you have this problem where, okay, then the size of the market is naturally limited by the size of the spot market. Imagine then a situation where, number one, you have a market maker. And again, like, what the hell does it mean to market make on NFTs? And then you add on to that like index product. And then you add on to that someone with an options product, where you can have like a structure that is okay with illiquidity, Asian options. Again, a lot of these are not my ideas. They're some of the very smart people who are building day-to-day in the NFT finance space. Then you can have people who are speculating on both sides, on the value of an NFT, on the value of an NFT index, with sufficient liquidity such that perhaps at a certain point, we can get to a point where it is more beneficial. It is not as beneficial, or it is costly, my bad. It is costly to actually attack the market. So yeah, like, hope that answered your question.
Yeah, it's difficult, right? Like there's a ton of systems that at this point can be tacked if you have the capital and it's worth doing, right? Like was the entire point of all of the Aave stipulations and all. I mean, just the entire point of manipulating any spot asset. This exists in rate derivatives. Like it's just it seems to be an unsolvable issue until the market grows, right? That just seems to be where we're at. Awesome.
I wanted to build on the NFT finance topic. I think this is a question from you, Johan. I don't know if you mind unmuting and asking about the DeFi NFT integrations.
Yeah. Hey, I think I posted a bunch of questions. Sorry. This one. So I guess the two of the ones I had were like what do folks think are kind of the most interesting next DeFi NFT integrations? I've seen some like perps products, but just curious, like generally, like what are the more interesting ones as NFTs get integrated more deeply throughout, like DeFi and DAOs and so forth. And then question number two is more like a kind of like a UI question, whether folks think that adding a gamified layer or game mechanics, whether it's like a profile that earns merit, or any sort of like gamified UI, is an interesting way to like ramp more users or improve the user experience for folks.
I like to think what's next is options. That's because we've seen people engage in clearly option-like behavior on NFTFi. And there is a platform called Putty, which has decent volume. Whereas perps, to be fair, there's a platform that's launching on the 10th. Is that right? Yeah, on the 10th of November. And so I think we'll see sort of like how the mechanism works and whether people will be interested. The next thing that is going to launch will be, so after perps, will be credit default swaps on your NFTFi loans. So things are developing quite fast here, but I know a couple of people that are working on this. I know people that are also working on insurance. But that like qualitatively looks quite similar to what's already in the market.
When you always say insurance, what exactly do you mean, I guess?
Yeah, default insurance.
Okay.
Yeah, default insurance. So yeah, that's TLDR. How to improve user experience? I'd say it's ultimately liquidity, which is one of the purposes of Goblin Sachs. We found out that peer-to-pool models and instant loans simply do not work on NFT and in NFTs. It's kind of like why a index hasn't been born yet, because there's insufficient liquidity, and so it's very easy to go into bad debt, and that's what happened to Ben DAO when they blew up. And so the peer-to-pool model, and so the peer-to-peer model that NFTFi has pioneered, it has sort of like overtaken the entirety of the market. And yet, you still can't get an instant loan on Nifty 5. It's very, very short, the wait time. I think for a Bored Ape, it's about 30 seconds. And we've really pioneered trying to get instant liquidity for these blue chip borrowers. But if you're looking at the longer tail, I think the wait can still be up to, a couple minutes, couple hours. That would be great if we could improve that.
I can't wait for NFT options personally. So excited to see a world where that exists. I wanted to ask a question of Philip. So you talked about this notion of middleware. So building middleware for basically kind of interoperability, aggregation, things like that. How is it being a middleware builder? I feel like it's not talked about enough. Is this the B2B of Web3, so to speak? I realize not completely.
Well, I mean, I think whenever we talk about composability or integrations, it's B2B, right? It's not only being middleware; it's also B2B. If I don't know, a Midas Capital or a Rari that offers fuse pools starts talking to other projects in order to get fuse pools started, right? So there's plenty of B2B in crypto, and I feel like especially as the space is evolving so fast, we're going to see more and more. The funny thing is that if you've come from the software as a service space, B2B here in crypto works totally different. So B2B in crypto is done a lot via investor introductions. It's also like decision making is driven a lot by backholding. So it's not always easy to get where you want to be. And all these things that we are used to from software as a services that are supposed to make all of this scalable, like having a conversion funnel and a whole sales funnel, and you do performance marketing to drive traffic and optimize that funnel and optimize for conversion rates, and you have your outbound email campaigns and you optimize on A/B testing and and all of that, and even sourcing these email addresses, the prospecting process, all of that, which is doable in so many ways in Web2, is a very manual and exhaustive process in DeFi. So you really have to build a lot of connections. Events are incredibly helpful to build personal connections. That's not only expensive on payroll, but also mentally, because imagine being a salesperson and just each and every reach out takes so many more steps. Like, with the project, are they more on Telegram? Are they more on Discord? Going in there, identifying the right decision makers. Do we need to talk to a product manager? Is there even a product manager? Then getting access through the community to the developers, getting in touch with them. So unless you get an introduction via your investors, so make sure you pick the right ones. It's really a tough process. And we already try to overcompensate that with a lot of content marketing. We do a lot of research, and we write about the interoperability space, about bridges. If you take a look at block.li.fi, we just released a 40 pages arbitrary data messaging comparison framework, and that just took 4 months of work, right? But that's one thing you can do, and also. I think there's a lot that is more manual and different than in traditional B2B software as a service stuff.
All right, definitely much more complicated funnels. I wanted to see if we could get to a few more questions. So, Greg, I know you had a question. Maybe this is where we could have Julian start off with this.
Sure, I'll just read it. It kind of sounds like a user story for a dev sprint, but as a builder, what building block tool or piece of infrastructure do you wish existed but still doesn't? I think maybe Terry had an answer to that, but I would love to hear from Julian.
I mean, there's a lot. I'll get really deep with it, man. Nothing can actually use custom errors yet in Solidity, right? So there's they added custom errors within the past year to Solidity. They're super useful in your code. You can you can, instead of having generic reverts or revert strings, make really structured error stuff and give actual data on what caused the error, if that makes sense, return all this data. Unfortunately, essentially no tooling can actually use these yet. So we implemented this upgrade in our contracts and found that it made actually our life a lot worse. That's a big pain in the ass. More generally, there is not, I don't really like Web3 Pi personally. There does not seem to be a really good way to honestly onboard people. That's like, that's probably the biggest, as a builder, what I wish would be around is an easier way to onboard people, whether it's developers from Web 2 to Web 3, or whether it's Web 3 developers to a specific skill. You know, I generally tell people to come here. So, you know, it's the best we've got, I think, at this point. I think that question can go in a circle, though. You know, Terry, any thoughts, I suppose?
I wish there's a way I could easily reach people. I mean, this is like literally like the, you know, complete like, you know, if only. I wish there was a way I could reach someone via on-chain message that they would actually actively look at.
Yeah.
Because the only way we know a lot of these borrowers is via like we just can't reach them. And like, oh yeah, I want to know my customers. Yeah, but like, how do you reach them? It's yeah.
Ping people on Twitter that follow you, you know, like hope it's the right person. That's about it. Yeah, Philip, any thoughts?
I know that Etherscan has the they tried to create a chat product. There's XMTP. There's but yeah, so hard to get in touch with users. I know Skiff even has a like a wallet address based email, but like nobody checks it, right? So Philip seemed like you wanted to say something.
I would be super grateful for some just working RPCs, just reliable RPCs. You know, like there are so many basic things to fix. It's also I'm just like, I'm not lacking a tool. I'm missing quality. The way APIs are designed and documented, the way things are working, and like crucial infrastructure is working or even not working, right? Like,
I just want
ridiculous.
Working event listeners, right? Like, I don't know, like this is probably my best technical, like it's easy tip for anyone here. Don't trust anyone's listening stuff ever. Like literally just don't ever even use it. Don't waste the time integrating like the new WebSockets and everything. They're going to keep telling you they've improved them. It's still going to be inaccurate and cause you issues on the back end unless like you don't really need any sort of like precision to how quick requests are coming in. So, you know, don't even do it. Just implement like grepping and regrep and grep again, and that's it. So yeah, give me WebSockets that actually work.
One RPCs instead of one token, right?
Yeah.
Now, I wanted to see if we can sneak in a couple of questions. I saw that there was a question. Maybe this is directed more at Terry. How do you fundraise in a bear market? What's getting your attention at 1KX, Terry? Your firm's attention? Any tips for builders fundraising out there?
It is considerably tougher. So I guess for context, like Goblin Sachs raised as well, and we have a couple more entities that we're like I'm incubating or like I'm part of that are thinking about the raise process. We've had to, and this is from both experience of being on the VC side, but also on the other side, like we've had to prove more traction. We've had to prove more customers. We've had to probably like lower the valuation significantly. And yeah, like those are the main ones, like customers, traction, valuation. That's sort of been my experience talking with other VCs. From the other side, as a VC myself, I would say the truly special projects, they are still being fought over tooth and nail. People are still killing for a tiny ounce of allocation in some of these very hot deals. Nothing has changed.
So be interesting. Yeah, cool. Yeah. I don't know. We're trying to raise in the coming month or two, and like what we've had people say is like finally valuations have started to bottom out to an extent, right? Which is important, at least on the seed rounds. You're not like having people say, yeah, but it's going to go lower, which is important. And like kind of like there's Terry is saying, the interesting deals are still getting a lot of
like attention, right? It's just that there's a lot less interesting. So, you know, if it's less interesting, you need some numbers to back it up. You know, that's at least my thoughts.
I also have something maybe as a tip, and this is something I've seen with many founders not getting right over the past few years on general. And it's like, even especially in the bear market, you have to double down on that. Like, if you want to create a competitive round, you need to get as many commitments as possible in a short period of time. So if you as a founder decide to fundraise, do it full time. Like, sit down with your co-founder and be like, look, these are my tasks. We need to somehow distribute them. Like, we need to make time for me to focus 100% on fundraise, because either you should be talking to investors or you should get yourself talking to investors. So you're either busy with being conversations. For example, I just did our Series A, and we're in the process of just closing it. But I think so we started end of June. In July, then I had an average of 11 calls a day. And then I continued until the end of, until mid-September. And I spoke to over 200 venture capital firms. And of course, I didn't know all of them beforehand. And with some, I had a connection in the past, but it was not warm anymore. So you really have to understand that this is a numbers game, like sales. Sales is a numbers game. Like, you fill up your funnel, and like, if your conversion rate is 1%, well, then just talk to 100,000, right? So that's like, just increase number of companies you talk to. Same for fundraising. And then obviously there's a lot of strategy you can put into place here, like sorting them by A, B, C, D tier, and start with the ones you don't have, and practice your pitch. I can promise you, if you have pitched your product 30 times in a week, in the first week, the second week your pitch will be totally different. And even after multiple weeks, you will see that your pitch is evolving. It's you're carving out more words, you're getting more on points. It becomes more like an arrow, and you get your messages across much better, because you have seen so many faces reacting to your pitch. Alright, so make it the number one priority, and really double down on just fundraising it, and be ready. Like, have your data room as much as possible. If you're a pre-seed, you don't have data, it's still called data room, because you can just have a nice sheet where you put together all the relevant links to your social media accounts, to your technical documentation, website, product demo link, pitch deck, which you should probably host on DocSend so that you can easily share it. Okay, there's so much you can do on the preparation side of things. Like, it requires 100% of your attention. And if you really want it and make that your priority, and then have a mental mindset for, okay, this is going to take me 4 months at least, then you can raise in a bear market. It doesn't matter which kind of market. And then in a bull market, if you do it in a bull market, well, then you have a very competitive round, hopefully, and you have a lot of leverage in negotiating your valuation in the end.
Yeah, I would just like Philip's saying, you're never going to get the pitches right at first. So I wouldn't necessarily say find somebody you don't want in the round and pitch to like that, people like that for the first week or two. But like, definitely save the people you really want for later on if you can, without like making it seem that you didn't want them in, right? Like, it will develop. The first a few of them will suck. I don't know. My biggest advice always for pitching is just like, be friends with the people on the call, right? That's always going to be the biggest factor. So, you know, sometimes you're just going to run into people and like, they're too tired and bored with their day to be friends with you. So like you felt was saying, it's a numbers game, right?
I guess
All
I can,
amazing tips. Yeah, Terry, go ahead.
yeah, I guess I could add some small logistics stuff that Philip reminded me. Yeah, definitely use DocSend, because most people won't open PDFs. The other thing is probably one thing we've seen that probably was a mistake in some teams is trying to fundraise and establish a relationship too early. VC firms tend to not look at the project again if they pass once, which means if you speak to them too early before you have like maybe additional material that might tip them over, it's going to be hard to like get on another call, because they've already like kind of said, okay, we're passing on this deal. Yeah, like those are the two. And I would definitely echo Julian's point on trying to pitch out and asking for advice from people who you don't really intend to raise from.
Yeah, and
Oh, and I have
side
one-
note with- yeah, good. Go on. Okay, it's
All right,
really side note with DocSend,
you first.
it gives you analytics. So like if you want to actually see what people are looking at in your deck, DocSend is also useful for that. It's like a little nice thing. But that was it.
And I have a small life hack to that even. There are two important links. There's a DocSend link to your deck, and there is the Calendly link to make organizing calls as easy as possible. So those are the two main tools you need. So because you need them, like typing them and copying them, pasting them is super exhausting, right? So what I have done is I have put them on shortcuts. So I have one shortcut for my Calendly. So it takes me there's my Calendly, it takes me, right? And then same for the pitch deck. So I have that on tap. I have that on tap. And so whenever I get introductions, it's like, hey, nice to meet you. Thanks for the introduction. Tap, send, done. So out of the way. For me, it's Command Shift C for the Calendly and Command Shift I for information for the deck. So these small life hacks just take off so much. It's small, but it does make a difference once you get dozens of introductions, and you live off these introductions, right? So just save
How
time,
do you
save
actually
time, save
remember
time.
people? So you met with, you said 200 folks? Did you actually remember
Yeah, it's
people by
over-
the 200?
No, it's weird when I meet them in conferences. I recognize face. I'm like, which fund was that? so no, it doesn't always work. But
Yeah, sure.
yeah, it's
Awesome.
I want to respect everyone's time. I realize we're 7 minutes over. If you all have more time to stay, definitely would welcome a couple more minutes. I wanted to actually allow for a reverse panel and see if the panelists had any questions for our audience.
Man, this is general user interview stuff. When you look for yield, do you guys go to a specific stablecoin, or do you just use the stablecoin you already have, right? I think this is a generic question that we've been actually struggling with a lot at both Swivel and Illuminate in terms of determining how to construct liquidity, right? If we think our users have a lot of demand to just lend rather than to lend USDC, well, then you create maybe a DAI market instead, stuff like that. That's a really tough question that I'd love opinions on at some point. But yeah, you guys can go for your questions and I'll just throw them out there.
Yeah, Julian. So when I first got in, I'm going to speak from a retail perspective, but when I first got in, right, I don't think I really understood the difference, and I did that research and really try to understand collateralization and some of the risks around stable coins, and ultimately landed in the my personal tier of these are stable coins that I prefer to use and play with. And when evaluating, let's say different investment opportunities, let's say yield farms, for example, right? I would certainly prioritize those projects where not only the pair was of quality, and the yield token itself was of quality, but also really heavily considering what is the stable coin quality. And I'm happy I made that decision, especially when you think about some of the algorithmic stable coins, specifically Terra Luna, right? That met their demise, right? Because they were under collateralized, right?
Sure.
So but I'm happy I'm definitely happy to talk to you about that more as a customer interview type. If you want.
Go for it, Greg.
Yeah. So this is more my partner than myself, but we've been playing around with a prop fund since day one. So the way he does it, he has limits on exposure for tokens, for any given token, and it depends, what the token is. USDC is obviously different than long tail stuff. And as long as we're within exposure limits, we would look for opportunities that provide more yield on the same token. If not, then we would look for kind of both at the same time. Switch out of something, kind of look for higher yielding opportunities, kind of keep that, that bar chart, if you want to think about it that way, balanced.
And this is just a more generic question. I mean, I'd love to give everyone else time to ask their own. For everybody, when you're looking for a partner or teammate, or even an employee, right? what's the single attribute you kind of look for most, I suppose, right? And I guess like let's actually just ask Terry and Philip. You know, when you're hiring, actually, are you guys still doing? All right, Philip, are you doing the hiring personally at this point? Yeah. No.
Well, no, we have a head of operations now who takes on the sourcing
Yeah.
and the first conversation. Like just that, keeping that away from Max and me, like Max, my co-founder and CTO, keeping that away from us is already good.
Huge,
Then before
yeah.
we hire someone, at least I jump on board at least once.
Yeah. What do you look for?
Yeah,
I
what
suppose?
I think so. What we look for signs of integrity. Like at least for me, this of course technical skills. We give them a task, an assessment every time now. We don't skip that even once. They always get a task. Even if they're a product manager or if they are in operations, then we let them build a small payroll DB, an Excel sheet, and just based on the quality of that, like do they take care, like the code quality of a small sample or of an Excel sheet, like it just gives you so much clue about how's the person working and what is what are this person's own standards. And then on top, I try to open up a lot. I'm trying to be very transparent about my past and what I feel and what I do. And I'm always looking for signs to getting that back, because if I can build that deeper connection and if I get a better idea, like what does the person want, I'm also very curious about, hey, and it sounds really stupid, but it's like that very yeah, I don't know, stereotype question, like where do you want to be in 5 years? I don't ask it that way, but I'm like, just like, hey, how does your ultimate career path look like? Like, what's next for you? What do you want to grow into? And I'm always making sure that we are hiring for the person that, like, if a person is a developer, no matter if front end, back end, full stack, I'm asking, what in particular are you passionate about? And also in the back end, you can be passionate about performance, you can be passionate about security, you can be passionate about software architecture, and reading all these Martin Fowler books back and forth. You can be passionate about using the newest tech, and then right, we might have a champion there for the new Next.js release that was announced yesterday, right? So I want to so figuring these things out and see how they fit into the team. This is something. There's a lot.
Well, Johan, you were unmuted. You can feel free to go for it.
Oh, sorry. I actually just typed it out, but I guess I can.
Go for it.
Just say it. I think for my end, especially like early stage employees or like co-founders or like employee numbers, like 1 through 5, I would say, once synced on the goal, people who are just able to like run at the problem autonomously without too much handholding, like that's been great. And then secondly, like just I tend to screen out yes men, yes women, people who just like aren't willing to challenge. Obviously that has to be done like thoughtfully and appropriately, but I also look for that. And then thirdly, I think it's been said, but proactivity, like doing stuff as opposed to like reacting or like being the victim, as Greg said.
Well, I suppose, how about the other way around? I don't know your position, but what do you look for in a founder, I suppose?
I think I think a combination of vision, but also low ego. Like that's just like idiosyncratic to me, but like I definitely am game to invest in founders with really high ego. They often are like the most like 1000x successful, but I don't want to work for one. I prefer to work for founders that are willing to be challenged. I guess it's a projection of like what I would be like, how I feel I should operate as a leader, and I kind of just flip that in terms of like the type of boss that I would be looking for.
Cool.
I have so formal over here. I have a question while we're like kind of on this like people topic, right? Because I think a lot of the times in these spaces we don't really talk about that, right? But Web3 as a whole has a distinctly different culture than I would say what you see in like Web2, and I see and have seen, right, the culture within those organizations looking drastically different. And it's my personal opinion that culture is like one of the most important things. Like culture will beat strategy 9 times out of 10, right? I'm curious as to like how you guys have tried to like manage that fun, playful Web3 exploratory, culture while still, trying to make sure things like get done. And like, there's some degree of professionalism and like how you balance, having fun, like while simultaneously working hard and, I don't know, just curious about you guys all as founders and,
Well,
and
let's make Terry answer this first. Terry, you guys have fun at 1KX or is it all work all day?
Yeah, suit and tie.
Yeah,
Phillip
yeah.
knows. No, you guys should check our website. It's pretty indicative of the culture that we have. We never had a website until last week. It was a Arweave link.
That's cool.
So we just like, I guess like offsites and seeing each other in person matters a lot. But I'd honestly say it's been kind of the small things. I guess one thing that I was pretty, it's hard to give concrete examples, but it's the small things like the fact that we're all on Telegram. Like we don't use Slack, we're on Telegram and Discord. It's like the type of messages. It's like the fact that, we have a sticker pack of like our founding partners.
Yeah, like every day when like our core team at least leaves and says like bye, I have a unique goodbye GIF ready for them, right? Like it matters a little bit, I guess.
Yeah, it's like small things that matter.
Yeah. Sorry, Philip, you were gonna say something too.
Yeah, I think it's also we chose Discord because it keeps our team closer to the community, and that gives them a higher sense of purpose and meaning if there are people actually using it and you're close to that, right? And then at the same time, you have to enable fun. So we have sticker packs, like we are really nerdy on purpose. Like we have, like we play that PV game like extensively. And it's a huge part of our humor. And yeah, and then in the end, Danny, I mean, the first prize, hire the right people, right? Like hire the people that want to get shit done. Like if I get the sense that our team is busier, if anyone would be busier, I don't know, hunting airdrops than getting things done, then it's just not the right hire. It's like find a balance, but also create channels for that. We have a channel for like off-topic NFA, like not financial advice, where people can discuss these things and like channel it. That's also a good advice here. Also maybe every Friday we have we use Gather Town now. So each Friday where there's one dedicated hour where we hang out in Gather Town and just I get in touch with people I'm normally not in touch with because they are, I don't know, they do DevOps, and like I talk to Max, my CTO, but we are 35 people. So I just don't talk to DevOps anymore. It's just not happening, right? But at Gather Town I can. I'll be like, hey, how are things?
Yeah, just to have fun. Philip, one thing that I definitely want is to get into that alpha channel with Li-Fi for sure. So I think it's pretty exclusive though, it sounds like. Yeah, I appreciate
what's the skill set we are hiring.
Yeah, probably more of that like journalists, but I'll slide in your DMs and we can talk about that. One thing that y'all touched on, but I'm kind of curious about, is like business development and kind of going really maybe more even higher level, like going to market and how drastically different that looks, right? And even maybe double clicking on that if anybody wants to, maybe this is a double-barreled question here, but also then like going to market and attracting liquidity, right? I think that those two things are somewhat tied and depending on the protocol. I'm curious as to how that looks different. Yeah, Philip?
I think especially in the beginning of a business, it's always the same. Do things that don't scale, like be where your customer, like pick a niche, like a tiny target group, and make solving their problem your biggest thing. And and this is always like, doesn't matter if you're Web 2, Web 3, this part never scales. You don't start with a full outbound engine from day one, right? Like this is, I'm just saying, like we are now after 2 years at the point where like damn it, how can we grow faster, right? How can we hit our Series B goals, and like how can we get there? So and now these things become an issue that actually, hey, B2B sales remains not really scalable. So we have to shift and look into different markets, maybe more towards TradFi, which is what we're doing now. But then again, back to you, like in your early stage, yeah, it's always the same. Get to talk to your target group, discover where are they hanging out. Are they on specific events, specific DAOs, communities on Discord, Telegram? Be where they are, and then don't be afraid of cold approaching everyone. And yeah.
Would you say it's the like ask for feedback, like ask, you know, it's like ask for advice? I mean, sorry, I'm trying to think the phrase. It's like, if you want advice, ask for money. If you want money, ask for advice, right? Like, is it kind of that approach to converting customers? Is that a way? Yeah.
There is two approaches. One is like asking immediately for feedback, but that has the underlying assumption that you're actually addressing a person's problem. So maybe start by validating the problem or invalidating the problem. Hey, do you also have a problem that, or do you think, or is it a huge problem for you that X, Y, Z? And how do you solve this right now? Can you help me out? Like ask for help on this problem. Hey, how have you been? Blah 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 blah. And then, but then also, you know, I hate that when someone does it to me and then sells me something. So be kind of smartish around that and be like, hey, by the way, how do you solve this? I'm thinking about building something to simplify this process. Like, so that way I'm upfront, but I'm still asking how is a person solving a problem. And as a founder, you should be obsessed about a problem you want to solve.
I want to respect everyone's time. I realize as a moderator, I haven't been looking at the clock as much as I should have, but I want to give our panelists an opportunity in case you have any last call to actions or things you want to share with the audience.
I'll go first. You know, join our Discord, come hang out. We've got a couple big releases coming up. Technically, I gave everybody in the previous kernel cohorts an airdrop, and not many people claimed it. So we'll be figuring out what to do with all you people in the future. So, you know, expect that at some point. And yeah, like I'll drop down a link to our new testnet, and feedback is super appreciated. And that's about it. One of you guys? Yeah, Terry, go for it.
Follow me on Telegram if you guys want to get in touch, and if you guys want to ask anything, I'm happy to answer anything. Also follow Goblin Sachs. We have multiple product launches coming up in the NFT finance space. And I also have another DAO where we're working on gaming analytics, where we have some things coming up there as well. So yeah.
Awesome.
Yeah, for me, it's as Schild already, Philip Zentner on Twitter. But if you are building anything cross-chain or want to simplify user onboarding, we have a widget that allows to let people buy into your protocol with any asset they have on any chain. So check that out. It's on li.fi. And if you personally need to swap, use our B2C interface, transfer to X or Z. Yeah, thanks for having me.
Awesome.
Thank you all for joining. I think we do have the Gather Town still, if people want to continue the conversation.
I won't be able to quite make it this time. We're 5 minutes from time on my end, so I'm just gonna be heading out. But you know, actually, also last call to action. We've got the Build Guild thing tomorrow, so if anyone's hanging out for that, that'll also be there at 1 hour before I think when we started today. And yeah, I think that's the right link, Sean.
Okay, cool. Thank you all. Thank you, Terry. Thank you, Philip. Thank you, Julian. Thank you, the whole audience,
for hosting. Later, guys.
Take care. Bye-bye.
You don't know how you met me, you don't know why you can't turn around and say goodbye. All you know is when I'm with you, I make
Stop recording there.
and swim through your veins like a fish in the sea. I'm saying